The ECB's monetary policy is right at the limit of what it can do. The question is, what else can Draghi do on top of that? Daniel Murray, EFG Asset Management. Well, China's consumer price inflation slowed to its weakest pace in just shy of a year in August, which appears to be adding to the growing evidence of a stabling economy. With industrial production data out on Tuesday, to what extent do you expect further evidence of a steadying ship?
I think when you think about China and its current context, you have to think about the stimulus that was applied last year and what impact that's been having this year, and then what's going to carry through the economic momentum into the year end. And the truth is that the stimulus that was applied last year is starting to fade a little bit, and so I think that places some downside risk to Chinese data coming out through the rest of the year. Now, having said that, I don't expect the data to collapse, but I just think that absent further stimulus, that there's opportunity for there to be for the data to be a little bit weaker than it might otherwise have been.
Okay, well, the ECB held interest rates at record low levels last week and gave few clues away in regards to its next move, though President Mario Draghi is due to speak again in a couple of days. With so much Eurozone data out as well, what are you expecting from this second speech?
The message that Draghi's been getting out there really for several months is that monetary policy in Europe is at the limits of what it can do. You think about it, they're already in negative rates, they're already expanding their balance sheet at a very rapid pace, and they're committed to do that for at least the next 6 months. And the question is, what else can he do on top of that? His policy options are quite limited. They're running out of certain government bonds to purchase, which is causing them practical problems in terms of implementation. And the broad message that Draghi is really trying to get out there is that there needs to be greater support for the economic situation in Europe from the fiscal side of things and in terms of structural change. So I just expect Draghi to continue with that same messaging, say that monetary policy is going to remain loose, but that they are at the limits of what they can do, and that the baton really has to be taken over by the government in terms of both fiscal support and in terms of structural reform.
And lastly for today, which other key indicators will you be looking out for through the trading week that have the potential to be significant market movers?
So there's a bit of inflation data that's coming out later this week for UK and US, and that's obviously important for the UK. We've got the Bank of England later this week, so be watching there. Any signals that potentially might encourage the Bank of England to move one way or the other. Obviously, Carney last week indicated that he might look to cut rates further if that were necessary. So any other UK data that will give us a further clue as to the post-referendum environment will obviously be watched very closely. I think as well, the market will be looking particularly today for messaging ahead of next week's FOMC meeting. So we know that Fed Governor Brainard is speaking today. She's renowned for being an arch dove. So if she were to adopt a more hawkish tone, then that might be an indication that the Fed was teeing up for a rate hike next week. I think that's, that's not our core opinion. I think that's unlikely, but there is that risk in markets this week, and I think that's what people will be watching today for sure.
Thank you, Daniel. I'm Sam Meredith, and that's all for today. But be sure to check back with the TV team throughout the trading week. See you next time.